Okay, guys, here we are. I'm back again, and I think I have the microphone going now. There was a technical difficulty, and thanks very much. A big shout out to my team who notified me of the technical difficulty in the Telegram group. And I've deleted and canceled the previous live that we were doing, and now starting again. Sometimes these things happen. The technology that we have is amazing that we can even do this, that I can broadcast simultaneously on Facebook and on YouTube and other places. But sometimes we do encounter various difficulties, sometimes of our own making. Okay. Anyway, so let's look at the charts. Let me go over here, and the chart's right there in front of you. And what we're looking at is the DXY. And if you trade forex, or if you trade anything, you know what the DXY is. That's the US dollar index, which is the uh, US dollar compared with 6 other major currency pairs. And we are looking on the 1 hour time frame. And so we have seen a huge drop in the decline, a huge drop and a decline in the US dollar today. And this is kind of surprising. I didn't expect this because we saw this, a little bit of a surge here when the China and U.S. Negotiations seemed to be improving. Okay, and then we had to drop down. This is after the reaction to the news, but then we started to get some moves up, and I really did expect that the U.S. dollar would continue maybe for at least 2 or 3 more days, but that's not the case. Today we saw a huge drop in the US dollar, a huge decline, continuing weakness in the US dollar. And so what that has done means that we've seen a flip flop in what the analysis was that I gave over the weekend, and our euro, odd, New Zealand, pound are now bullish against the US dollar. Of course, if the US dollar is dropping that much, we're going to see bullish movement on our currency pair. So let's just look at the euro. You see the big move we had up on the euro today, the big move we had up on the Australian dollar today, and the New Zealand dollar, a little bit of a move up, pretty good size move up for the New Zealand dollar. And then the pound, a gigantic move on the pound. And the USD CAD, okay, of course, that's coming down with the weakness of the US dollar. What about the UJ, the JPY? And of course, that one going down also. So this is a little bit of a surprise. I did expect most things to be going the other direction to follow on the pattern that we've been seeing from the previous week. But that's what happens. And never mind. All we can do is react to what we see. We cannot predict the markets. Let's have a look at Bitcoin. And here is Bitcoin for today. And yesterday, this is Sunday. Okay, Sunday made a massive move up to 107,000. And that means that it looks like it's very clear that we're going to continue to see higher prices on Bitcoin, almost getting up to the all-time high of what was that, 109,000. Okay, today we reached 107,000 and $147. Okay, it's dropped down today, but that's normal. We know that with Bitcoin. Today it has dropped down $5,000. It's no big deal. Okay, we're going to continue to see higher prices. What's important is that we are seeing Bitcoin stay above 100,000, and this has been for almost 3 weeks. Bitcoin staying above 100,000. So it's just building this new foundation, building a new structure here, and getting ready to launch into higher prices, maybe go to the stratosphere. Just time will tell. I don't trade Bitcoin, but I do buy Bitcoin on a regular basis, dollar cost averaging, as an investment in digital assets for the future. So we've looked at the DXY, we've looked at the currency pairs, we've looked at Bitcoin, and now, of course, everybody wants to look at gold. And I have drawn out my support and resistance lines. For those of you that trade gold, all right, and what we saw today, this is the close on Friday, from last Friday. Okay, and then today, when the Asian Pacific market opened, gold gapped up and went almost to 32.46. It went to about 32.40 in that range before, going up a little bit higher and then coming down and then up again to 32.46 before making a big drop down to that first support level right there, which is 32.18, 3218. So it was a big drop with the open of Singapore, big drop in the open of Shanghai, the really beginning of the Chinese trading for gold. So a big drop there, and then went sideways for several hours before dropping a little bit lower. We got down to 32.07. And then London started to come in, Europe and London started to come in, pushing the price back up. And we've bounced off of this resistance at 32.46 for 1, 2, 3, 4, 5 hours. And now gold is starting to head back down. And now we have already reached our previous support level at 32.17. So right now we're testing this 32.17. And what can we do? Do we sell or do we buy? Do we sell or do we buy? Well, gold is a roller coaster. It really is. You know, you look at big move down, big move up, big move down, big move up. So what do we do today? Well, it looks like we're going to stay between, at least, maybe not between these two levels here. If gold should break 32.17, 32.18 right there, if this breaks, then the next level would be 3200. You see that right there, 3200. But it looks like gold is going to stay right in here. We have no fundamental news tonight. There's no high impact news. So there is not really anything that will be a catalyst to move this one way or the other. So I think that we're going to fluctuate between 32.48 and 32.18, those two levels there. So I'm not taking any trades on gold during the U.S. session today. I'll just wait and see how it plays out. However, if you should see gold start to break below 32.17, then it would be a good idea to go short at that level and expect that you can take profit at 3200 if you start to see gold to go that direction. But let me just go over to my other charts and look very quickly at the, wait, let me go back there. Yeah, let me look very quickly at my day chart while I'm talking. Gold is still bearish on the day chart, and gold is still, well, it has actually turned bullish on the 4-hour chart. Gold has turned bullish on the 4-hour chart. And that's the chart we're looking at now. We're on the 1 hour, but if we go to the 4-hour, gold is bullish on this chart here, on the 4-hour chart. And gold is bearish on the day chart. So what does that tell us? Bearish on the day chart, bullish on the 4-hour chart. Those are conflicting signals. So it means be careful, be cautious. And what you see here is green, red, green, red. There is no clear direction on the movement of gold. So in these times, you need to trade very carefully and be sure whatever trade you take, you use a stop loss and protect your capital. Don't just chase the candles. All right. In this kind of trading, it's wise to be very, very cautious. Even if you don't trade, that's a good idea. Okay, sit on your hands. I know you want to trade, but you don't have to trade every day. The market will be here tomorrow, and there'll be another opportunity and perhaps a much, much better trade setup tomorrow. Okay, if you have any questions or comments, leave them below this, and I will get back to you. If you're watching on Facebook, please like, love, and share. And if you're watching on YouTube, leave a comment and be sure and subscribe to the channel and click that like button. Thank you all for being here wherever you are in the world. I hope you could hear me loud and clear on the second run through, and I will see you again same time tomorrow.